Hi there, good afternoon. You're tuned into ET now, and this is Market Fatafat with me, Cheryl D'Souza. Along with me, I have Vinny Motiwala. Very good afternoon to you, Vinny. And we are hoping that by the time we start this show, we would have hit that record high level for the benchmark indices. But that's not the way how it has transpired. If you look at the benchmarks, they have actually given up their morning gains. Right now, they're in the negative territory. Nifty has scaled past that 18,700 mark, comfortably above it. But from there on, we've seen only one way down for the benchmark indices. Right now, Nifty is just testing 18,700 as we speak. Talking about what the broader markets are doing at this point in time, that is the mid-cap index as well as the small-cap index. If you look at both of them, they are also in negative territory, moving rather they are underperforming the benchmark indices right now. Small-cap index is down about 0.5% or so. Nifty Bank, tad bit of outperformance when you compare it to the benchmark indices. Right now trading flat with a negative bias. If you look at the advance decline ratio at one point in time when you kick-started the day, it was very much in the favor of the advances, but now that one has reversed and now you have more stocks declining when you compare it to the advances. Talking about the sectoral indices, then is the realty index that is taking a sharp knock in today's trading session, 1.5% downtick coming for real estate. You have FMCG index that's down about 0.9%, IT index, pharma index, all of them are declining. When the flip side is the energy and the metal sectors that are holding on to some sort of a green in today's trading session. So that's the way how the market setup is looking like. Vinny, 18,700 around is where Nifty is trading.
Okay, surely that's how the market setup is like. But Cheryl, let's look at some of those individual movers in trade which are buzzing in trade, either on the back of news flows or on the back of technicals. And we'll be taking you all through all the stocks in the next 1 hour. And today on the technicals, we're joined by Kunal Bothra, while from the research team, we have Vamakshi as well as Ashesha joining with us. A very good afternoon to all three of you all, and I'm going to be starting with the first stock for today, and that is going to be Aether Industries. Now, this one is in focus. Why? Because the company has actually executed a letter of intent with a US-based leading global oil field service company for a strategic supplier and contract manufacturing partnership as well. Now, obviously, we saw the stock jump as much as in the morning trade of 7%. As of now, also holding on to gains of 6% in trade as well. So, obviously, in terms of what this actually comes out to be, this letter of intent paves the way for execution of a strategic supply agreement between the two companies within 3 months of the letter of intent execution. The letter of intent specifies 4 strategic products of new customers that will be contract manufactured by Aether at the first set of products in this new partnership. Now, on the back of this, we're seeing Aether Industries is in focus, and obviously just in terms of the revenue also, just the first product itself will be giving the company a decent revenue in terms of the first set would be giving around 300 crores per year for the company in terms of the top line is what they have highlighted as well. So on the back of this news flow, let's keep an eye out on Aether Industries.
All right, moving on, let's talk about Shilpa Medicare, and this particular counter was seeing an uptick of approximately 3.5% earlier in the day. If you look at the brokerage firm, that is Arihant Capital, has said that Shilpa Medicare may look to monetize assets and biological business to bolster their balance sheet and invest in future initiative. Arihant Capital also pegs double-digit growth in FY24 top line with operating margin expansion. So on back of that particular development, or the note, you saw Shilpa Medicare see an uptick of as much as 3%, but now with the rest of the market and the pharma pack, you can see Shilpa Medicare giving up all of those gains right now, trading flat with a positive bias as we speak.
Let's move on and talk about Kunal's first stock. And Kunal, you've picked out HDFC Bank. Obviously, in terms of the private banks, does this turn out to be your top pick? And what is the target that we should be keeping here?
So, good afternoon. My sense is that HDFC Bank is one of the major reasons why the markets are, or the bank Nifty is not falling very sharply, because the way most of the mid-cap banking stocks have fallen today indicates that there could have been a sharper sell-off. But HDFC Bank is showing signs of solidity back again. The stock over the last 2 weeks has retested the levels of 1610, 1615 mark. In the earlier attempt, the stock bounced off to 1650 levels, and this time around the stock is up 0.5% approximately so far today. So we are expecting the stock to come back towards 1650 mark, at least over the very near term. Now the good part is that these large cap banking names have managed to show signs of resilience yet again, and I think if that's the case and that's the trend for even the next couple of days, then I believe that there are higher chances that even with this slight increase in volatility, the markets can continue to move up higher. So the large cap performance is what matters for the very near term. So I believe HDFC Bank could be an interesting stock in that regards. 1610 is a major support, and on the upside, from a very short term view, we would be looking at 1650 to 1680 as a target for HDFC Bank.
The target for HDFC Bank, 1650, 1680 in the very near term is what Kunal has to say. But let's hear out actually what Devina Mehra has to say on the entire financial space, especially banks, where she's a little apprehensive. But NBFC in the financial space is a top bet. Listen in.
I'm a nervous investor in banks and lenders, let us say, as a general rule. So throughout 2020 and 2021, we were not investors in banks to any significant extent. In fact, it was a risk relative to the index because the index has such a high weightage. Middle of 2022 onwards, we became market weight on banks, so which with price action has become overweight, but not really on the non-bank financials. We will have still very small holdings in the non-bank financials because, as I said, I mean, as personally as well as the fact that we generally prioritize risk management over everything else. That's a space we are generally not very comfortable with. So, that's where we would be just now.
Okay, let's move on to the next stock, and Jindal Poly, Vamakshi, was this one in focus today?
The stock is in focus on the back of a news flow wherein the company announced that they have signed an agreement in order to acquire 100% stake of JPF Netherlands Investment BV. Now, this is a Netherlands-based company, and in fact, it is engaged in the business of packaging films through its 3 wholly owned subsidiaries that are based out of France, Italy, as well as the United Kingdom. Now, the products that this company actually makes are used as flexible packaging in industries such as food, pharma, as well as luxury. So, given this news flow, we do have Jindal Poly Films in focus today. The stock did climb to almost 740 rupees per share, seeing an uptick of almost 10% on an intraday basis. And as of now, the stock is still holding in the green despite the significant fall that we've seen in the market, up nearly 7.5%.
Moving on, Ashesha, let's talk about hospital stocks in particular. Why are they in focus today?
Well, yes, both these healthcare counters are in focus today, and that is because the government authorities recently revised CGHS or Central Government Healthcare Scheme rates for certain categories of healthcare services. Scheme provides subsidized treatment to current as well as former employees of central government, and on the back of this rate revision, Jefferies has come out with a note where they say that current rate revisions were limited to only IPD and OPD consultations. Prices were revised anywhere between 10 to 20%, and Jefferies also believes that diagnostics and treatment pack rates will also be revised in the month of July. They believe that the rates revision could drive earnings upgrade for all of these companies. Fortis and Max are likely to benefit the most, and EBITDA impact could be anywhere between 3.5% to 6% for both of these companies. So on the back of this report that has come in from Jefferies on account of price revision, both of these counters are buzzing in trade today.
Okay, let's move on and talk about Maruti on the charts then. And Kunal, how should we be viewing the charts for Maruti? 10,000, how soon could we be expecting that? Just 400 rupees away from that almost.
Yeah, and I think auto stocks have been doing quite well, the large cap auto stocks. So it started off with M&M actually in 2022 second half, which led the rally from the front. And then, many of the other stocks like Tata Motors participated in the start of 2023. Then you have Hero MotoCorp, etc., which have done reasonably well. So Maruti was actually a laggard, and that stock is also now trying to play a catch-up. Now, this trend which has emerged for Maruti in the last, few weeks has been very, very strong because, it indicates that the stock potentially could have restarted a very strong uptrend, something which the stock was missing out since the last, 1 to 2 years. So this may not just be a short-lived up move for Maruti, but I believe potential of the stock breaking past about the 10,000 mark, which should take the stock back towards the life highs, as well as even scaling much beyond those levels is pretty much high probability this time around.
Okay, keeping an eye out on those levels for Maruti Suzuki. Let's move on and talk about Deepak Fertilizers. Now, this one is in focus on the back of a bulk deal that happened last evening, where we saw that small cap fund has actually sold 23.54 lakh shares in the company. So, on the back of this, we're seeing a bit of a move coming in on the stocks. And now, overall, when you're looking at it in terms of the bulk deal, it was via an open market. that we saw coming in. And small cap fund, like I mentioned, sold, as well as Anirudh Damani also sold in the stock as well. Damani disposed of around 42,943 shares, while small cap World Inc. fund sold around 23,54,000 shares. That's around 1.86% stake in the company. We don't have the buyer's name, but yes, this was in the open market, so keeping an eye out on Deepak Fertilizers today.
All right, moving on, let's talk about Trigen Technologies. And that particular account at one point in time saw an uptick of approximately 7.5% or so, taking the stock to the highest level since May 30th. The IT solutions company has said that the contract of unit Trigen Technologies with the United Nations for provision of information and communication technology staffing support at UN missions has been extended for a period of 6 months. They've said that the not to exceed amount to be made by UN under contract revised to $259.8 million. If you look at the stock price, it's up for a second consecutive session. Right now, it is fair all those gains that it had registered, approximately 7% higher it was earlier. Right now, it's trading higher by about 2% or so.
Okay, let's move on and talk about LIC then, Kunal. Since the listing, when you look at it, it's not done anything. Now, what are the charts actually indicating for LIC? What should we be expecting here?
Major reasons for picking up LIC today is the fact that the stock is showing signs of very interesting chart patterns, a swing breakout. It's a possibility of inverted head and shoulder pattern breakout for LIC of India, and the breakout point for the stock is just around that 615, 616 odd mark on the spot level. So round figure around 615 mark, I would believe could be a good breakout point for LIC. The last 1 month, the stock has seen good recovery, volumes have inched up higher, so which means that the setup could be very, very attractive. Now, for traders who are looking out for mid-cap names, and especially stock from the insurance pack, LIC is one stock which has been an underperformer. But I think after the completion of this pattern, whenever it happens about the 615 mark, could be a good breakout zone for LIC. So would look out for targets in the range of at least 650 to 680 over the very near term. Breakout point 615.
All right, that's the take coming in for LIC. Vamakshi, so Snowman Logistics, why is this one in focus today?
Cheryl, when we look at this counter, it has been in focus in the very recent past. The stock, last time I checked, was hovering around its 52-week high levels, and on a year-to-date basis, it has gained over 10%. In fact, from the recent low that the stock hit in March 2023, it has recovered over 40%. So that is the reason why the stock has been in focus recently. But in fact, today the stock is a buzz after we saw a bulk deal take place yesterday. We did see Gateway Industry Parks Limited buy almost 11 lakh shares of Snowman Logistics at 40 rupees per share. So largely that is the news flow surrounding Snowman Logistics. The stock has been in focus in the past and continues to be in focus. A strong uptick of almost 6% coming in for this counter.
Okay, that is on Snowman Logistics. Let's keep an eye out on that. But on that note, viewers, we're going to step into a very short break. Don't go anywhere. We'll be back with more stocks after this break.
Welcome back. You're watching Market Fatafat right here on ET. Now, let's continue taking you through all the stocks that are moving in trade. And Ashesha, let's talk about Tata Steel as well as JSW Steel. JSW Steel for sure is on a really firm footing, irrespective of being markets being weak.
Absolutely, and both of these counters are buzzing on the back of a brokerage note that has come in. This morning we had a report from Morgan Stanley which has maintained its equal weight stance on the stock. They've given a target price of 110 rupees per share. They say first quarter FY24 domestic spreads may be muted. Coking coal correction will benefit the company only from the second quarter of FY24. As far as talks with UK are concerned for transition to green steel, they believe that they expect a solution in a period of next 12 to 24 months. Yesterday, interestingly, we had a report on JSW Steel as well, where Morgan Stanley maintained its overweight stance on the stock with a target price of 580. The management reiterated their volume guidance for FY24, which indicated a jump of about 9% on a year-on-year basis. Steel prices, however, they believe could remain volatile in the near term. So on the back of these brokerage notes that have come in, both of these counters are buzzing. JSW Steel gaining nearly 3.5%. Tata Steel was trading, gaining earlier in the day, but has now slipped into the red in line with the broader market.
Let's move on and talk about Tata Power then, Kunal. This one is buzzing in trade today. Do you think it's all powered up to see a rise up move now?
Powerful move for most of the power stocks. Torrent Power was one of the first ones I think if I'm not wrong, just about a couple of days back, where the stock had made a fresh 52-week high, as well as I think a life high for itself, and then it was followed by short covering for many of the other power names. Now the reason for flagging of Tata Power is because of the way the price volume behavior has happened for the stock. Today's volume, I think, on the NSE is almost one of the best volumes the stock has seen in the last, I think, 3 to 4 weeks, which again reinstating the fact that the stock is going through a price volume breakout, as well as a strong trend for the entire power sector. So I believe Tata Power could be an interesting bet. 215 to 16 is a very good support, and I think keeping that as a support or a stop loss, traders can look to hold on to their long positions or build long positions at current levels with a potential target of 232 to 235.
Okay, let's move on and talk about Wipro then. Why is Wipro in focus today? Because Wipro and Kisco have launched a managed private 5G as a service solution to accelerate the enterprise digital transformation. Now, the new offerings will actually enable the enterprise customers to achieve better business outcomes through the seamless integration of private 5G with their existing LAN, WAN as well as cloud infrastructure. On the back of this, we've seen that Wipro opened up on the positive side, but he has given up all those gains and trading with a decline of almost 0.5% as of now, Cheryl.
All right, and that is Wipro for you. But staying with the IT pack, Rhythm Desai of Morgan Stanley believes that the IT earnings may remain soft for a few more quarters. Listen in to what else did he have to say on the Indian IT space and what's impacting them.
IT services, I think, is a mixed bag, but I would generally be constructive. I think even though there is a slowdown in growth, we may not see the same type of tech spending cuts as we saw in previous US growth slowdowns because of the structural tailwind which comes from the spending that companies need to do for digital and AI. I would concur with the companies if they say that artificial intelligence is a huge opportunity. Now, coming to the near term about the next quarter or two, yeah, there is a likely slowdown, and there is cutback happening in America. There are jobs being lost, but it's not like the American economy is down spiraling into a recession. It's not our base case view. So if we do get a recession in the US, which is a bear case view, then there will be further downside, and I think IT stocks will get tested on the downside. But since that's not our base case view, I think the likely slowdown in spending is already baked into the share prices. So I think it's a good place to be. And in a portfolio context, I think you want to own IT.
All right, so that's the word coming in from Rhythm Desai of Morgan Stanley. But let's move on and let's talk about Hatsun Agro. And if you look at that particular counter, remember Hatsun Agro is a dairy firm, and that particular counter saw an uptick of approximately 5%, taking the stock to the highest level since May 2nd. If you look at the stock right now, holding on to gains of about 4.8% as we speak. The company said that it was considering sale of their windmill division on a slump sale basis, and that particular development kind of saw a spike led to the spike in the stock. You can see Hatsun Agro on your screens, 4.8% uptick right now.
Okay, let's move on to stock number 15. And Kunal, on the charts, BEML, this cap good major as of now, is it an attractive time to pick up BEML?
I think it's a very good trend for BEML. Over the last 1 month, the stock has recovered from 1150 to now 1500 plus levels, which means almost a recovery of 350-400 points for BEML, and that's a very sharp recovery from where the stock was 3-4 months back. Now the volumes in this last 1 month is very interesting. The first strong volume candlestick pattern the stock has shown was at the start of the first week of May 2023, and that was the point where the stock started to move into an uptrend. Post that, it's been making a pattern of higher highs and higher lows. So again, reinstating the fact that the price volume breakout which started off for BEML in the month of May continues for the stock price, and that generally is a good sense that the price trend is sustaining on the upside. Would expect the stock to head towards the first important resistance point, which is just about the 1600-1620 mark. So expecting another 80 to 100 points on the upside for BEML over the very near term.
All right, moving on. Vamakshi, why is NIIT Limited in focus today?
Is in focus. In fact, when we look at how the stock opened today, it opened at 98.7 levels, and this came in after the stock was adjusted for the demerger. The stock later on went ahead and jumped to almost 4% to hit a high of 103.6 per share as the session progressed. Now, just as a recap, let's look at what NIT had done. They had announced a composite scheme of arrangement wherein the company transferred its corporate lending business, rather corporate learning business, to new company that is NIT Learning Systems, and this was effective from May 24th. Shareholders of NIT were expected to get one share of NIT Learning Systems, that is the B2B business, for each share of NIT when the latter gets listed on the stock exchanges. Now, this listing is expected to come in over the next 5 to 7 weeks, and overall, on the back of that adjustment that came in place on account of the demerger, we have NIT in focus today.
Okay, let's move on and talk about graphite then, Kunal. When you look at the stock, just in terms of last 1 year, last 2 years, this one had not done anything. But finally, in the last 1 month, seems like the stock has picked up pace, and even just last 1 week, 14% gains. What are the charts indicating? Is this a time that finally we'll see a good up move coming in for graphite now?
Sense is that the probability is extremely high that this trend should continue, sustain, as well as build for Graphite India. Now, Graphite, HEG, both of the stocks, they tend to move in tandem. Look at the last 4 weeks of volume built up for the stock price as compared to the volumes the stock had shown over the last so many months when it was trending down. And the average volumes have shot up to, I think, if I'm not wrong, around 4x to 5x for Graphite India. And that, in effect with the price action, indicates that this is a very strong uptrend which is in play for Graphite India. Now, remember that this is a high beta stock, so having a steep risk reward of 1:1, 1:2 would probably be a better strategy for the stock, because that could probably indicate that even if the stock goes into an odd phase of correction, traders can still hold on to their positions. My belief is that 320, which was the previous swing low for Graphite India, should be a major support, and any dips closer to that 320 mark could be taken as a very good buying opportunity.
All right, moving on, Ashesha, Devyani International, why is this one in the spotlight today?
Focus on the back of a note that has come in from Goldman Sachs, where they are maintaining their buy stance on the stock with a target price of 200 per share. The stock currently trades at 182 odd levels, which means Goldman Sachs is betting on a 10% upside from the current market price. The stock, of course, has recovered from the highest point of the day, but despite that, it is sitting with gains of nearly 1%. They say SSSG recovery is likely to happen in the second half of FY24. As far as margins are concerned, they are expected to remain flat on a year-on-year basis in FY24. Costa, meanwhile, has reached critical mass, and this could prove to be a value creator for the company, and they believe that the long-term prospects of the company are pretty strong. So for now, they're maintaining their buy stance with a target price of 200, and that is the reason the stock is buzzing in trade today.
Right, that's Devyani International for you. Let's take put the spotlight on Zen Technologies. It saw an uptick of as much as 9.6% earlier on in the day, taking the stock to the highest level since October 2004. And why is that? Because the company bagged an order worth about 202 crore rupees from the Defence Ministry, and because of that, the company also, the stock price also snapped a 2-day losing streak. And the level that the stock reached at one point in time was the record high level coming in for Zen Technology. No doubt the stock has moved a tad bit lower from those elevated levels, but still holding on to good gains of 4.5% as we speak.
Okay, on that note, what are the sectors that Devina Mehra, Chairperson and Chief Investment Strategist for First Global, what is on her radar, what is she avoiding, what is she underweight on? Let's go across and listen in as we sip into short.
One theme, of course, which I have spoken, I think, many times on your channel, because that has been the biggest overweight sector for us right from now more than a year and a half, about 20 months or so. Since October 21, which is capital goods and industrial machinery, and each quarter we think that is the story over, but our system still like it. We have switched stocks and so on, but the sector as a whole, we still like, our systems like. Banks, as I said, we'd be somewhat overweight. What we have added in this calendar year would be autos, auto components, a few construction stocks, a few pharma stocks, IT, we remain, I think, slightly overweight, not a hugely overweight, but slightly overweight. So that would be broadly and of course, yeah, not everything is a sector call. As in 2022, some of our biggest winners were ITC and Raymond's, which were not sector calls. In terms of what we don't like, you were talking of the refinery OMCs, so that sector still we don't really like. Real estate also we're generally still avoiding. Then there are some of these consumer durable paints, that kind of thing. I don't think that sector prospects are still very good. I mean, that might change as inflation comes down and all that. But for now, those would be probably the sectors that we don't particularly like.